Hey there, friends. My job as a mortgage professional is to give you really great advice. In order to give you really great advice, I have to study the market and I have to get advice from really, really smart people. So what I'm going to do today is I'm going to give you some advice from data, some advice from economists that help me better advise my clients as we head into the future. Now we're at the beginning of 2025. So this information I'm going to share with you is the information that I'm giving clients right now that are getting ready to make the largest financial decision of their life, whether that's to sell a home and to buy another, or that's a first-time home buyer getting ready to purchase their first home. Now, as a real estate agent, my job as a mortgage professional is to give you great advice to help you sell more homes and to do it at an elite level. This information is going to do exactly that. So I'm going to give you a 2025 market forecast relative to the mortgage industry, things that you need to know, information you need to give people unless they're paying cash for a home. The majority of people finance homes. And so this is helpful information you can have in your back pocket so that you're more informed in the market. Then we've got some breaking news in the industry here in January. Now, there's been a lot of distractions right now because of some unfortunate events down in California with the wildfires and everything. And so this information is being covered up or shadowed by that news. And that is the CFPB removing all medical debt and collections from reporting on credit reports in the past and now moving forward in the future. So this is huge. We're going to talk about this actually first, and then I'll go into the market forecast. So the medical collections, the medical debt showing up on credit reports, that has crippled so many home buyers in the past, meaning they didn't qualify for a mortgage because of that debt, because of those collections. Some debts were as small as, $200, $300, missing a copay and then getting sent to collections, and that throwing your credit score off, and that throwing your mortgage pre-approval in the trash. Other times, there's been clients that have $20,000 or $30,000 in medical debt where they just have not been able to pay those bills, and the creditors and the collection companies have just hammered them, killing their credit score. Well, no longer. That's all getting removed. So this is going to help people that have been impacted by this raise their credit scores. Just to give you an idea of how important, how impactful this is, $49 billion in medical debt and collections is going to be removed from credit reports starting this March 2025. Now, the other thing is, this is going to impact about 15 million Americans. Studies from the CFPB, and this is a part of Regulation 5, okay? So this is not something that just is kind of like the president's doing or some legislation was passed. This is something that has already been established and in place. They're refining that, or they're finalizing Reg 5. Okay, the other thing, what they're saying through this study, and the reason why they're doing this is going to help 22,000 plus mortgage applications. So people that have applied for mortgages in the past and have been declined, or people that have want to buy a home, that could buy a home, that because of their medical debt or collections have not been able to. It's going to help about 22,000 to 25,000 people now qualify for a home loan. So this is really big news. Now, does this mean that they are now free from paying that debt? No. You still owe the debt. It just is not going to report on your credit report. So this is breaking news. If you're a real estate professional, get this out to as many people as you know. There's a lot of people. Look at the numbers that the CFPB shared. 15 million Americans are impacted by this. 22,000 to 25,000 Americans now qualify for a home loan that didn't before. This needs to be shared. This information needs to get out. You need to be aware of this. Now, the other part of this, if you are a home buyer or a home owner that has experienced medical collections or medical debt on your credit report, relief is on the way. This should hit your credit report by about March, April 2025, okay? For more information, reach out to me on this. I'm happy to share that with you. Let's talk about mortgage rates. Now, in order for me to forecast mortgage rates for 2025, you have to understand, well, we got to be up to tune on some data, but you have to understand a little bit of perspective, where we've come from, where we're at, and some of the highs and the lows. So currently, January 2025, we're seeing 30-year fixed rates right at about 7.125%. Okay? Now, again, this is not a quote. This is on average, and this is based off of Mortgage News Daily. In fact, you're going to see a slide here in a second. I'm going to show that. Current interest rates, 7.125. Let's look at 1 year ago. So 1 year ago, interest rates, 30-year fixed rates, on average, were about 7.08%. So right about the same. So year over year, we're almost exactly the same. Let's look at the highs. Now in October of 2023, we saw 8.25%. So we saw a high of 8.25 in October of 2023. We saw a low just this last year, about 4 months ago, in October of 2024 of 6.11%. Now, we all thought in October of last year, just about 4 months ago, that this is it. Rates are going to come down. And then some jobs numbers came out, inflation numbers came out, and inflation's not where it needs to be, economically speaking, for rates to come down. And jobs, we still are creating new jobs, and we're still retaining enough jobs to show that we have a stable economy. And so rates are going up. Rates are staying up. So what are they going to do this year? Now, I get my information from solid sources. Now, these are the 4 sources that I've followed over the last 10, 12 years that have been pretty accurate. I would say the final source, MBS Highway, is the most accurate year over year, and that's because Barry Habib is an economist, and he has his pulse on the market, and as far as accuracy, he's about as close as you're going to get. Now, Realtor.com projects that 1 year from now, we're going to see 30-year fixed rates right about 6.2%. NAR, the National Association of Realtors, they're estimating low 6s, right around 6%. Zillow doesn't want to play right now. MBS Highway is saying 5.875. Okay, so you can take this information, which is big. Okay, that shows that rates are going to come down, projected to come down in 2025, but not a whole lot. Remember, last year, October 2024, rates were in the low 6s. Year over year, right around 7. So we could see business as usual. What I'm telling my clients is that we're probably going to see 2024 all over again, all things considered. So we need to prepare and adjust. Now, what I'm hearing in real estate, so King and Snohomish County, the 2 main counties in the Puget Sound that I fund the majority of my mortgages in, and Pierce County and Skagit County. So those 4 counties are expecting 8 to 10% appreciation based off of local economists. So if you take projected 30-year fixed rates, 8 to 10% appreciation, you take this information, if you're a real estate agent, that's pretty cool. You get to see, it's like playing an opponent in a sporting event and seeing their playbook. You have the market's playbook. It's based off of data, it's based off of experience, and so now you can educate, you can coach your clients accordingly. Now, if you are thinking about selling a home, thinking about buying a home in 2025, now you know. So when you're working with professionals like myself, professional real estate agent that understands the market, that is tied in and dialed into the market, we can put together a report like this. Now, the reason I make these reports for all my clients, the reason why I love this report so much is I take, it's buy now, it's the cost of waiting. So buy now versus wait. If you were to wait, so people, the most common objection that I hear in my business is, hey Dan, I'm gonna go wait. Thank you for all your help. Thank you for approving me, but I'm gonna wait until interest rates come down. Or I'm gonna wait until the spring. Or I'm gonna wait until there's more houses available, okay, or the housing market's more stable. All right, so these are objections that I hear. So what I do is I make a report like this, and it shows the opposite of what the clients think, okay? Again, based off of 8 to 10% expected appreciation, based off interest rates in the low to mid 6s for 2025. If you bought now at $800,000, take a look at this. If you bought now at $800,000 with a 7.11 30-year fixed rate, your total monthly payment, estimated payment with taxes and insurance and PMI, this is with 10% down, is right around $56.84 a month, $5,684 a month. With your total cash to close, right around $93,000. That's your down payment plus your closing costs. Now let's look at this. What if you were to wait 1 year? Homes go up 8 to 10% in appreciation, okay? Rates are right around 6.25, so they did drop. Okay, this is a scenario. You're thinking that because you waited, that it's a better deal, but look at your monthly payment. Your monthly payment goes up almost $300 a month. But I got a lower rate, Dan. Well, look what happened. You're financing $810,000 instead of financing $720,000. You're paying more for that house because of appreciation. Now, Here's something you also have to consider. You talk to any professional real estate agents, they'll agree. If you're in any of the markets that I've been in over the last 10 years, you'll agree. When rates drop and homes go up in value 8 to 10%, but rates drop at the same time, it produces a buyer frenzy. So the offer that you'll make on a house most likely will be with 2 or 3 or 4 other offers, and you'll get into a bidding war. So on top of the 8 to 10%, you're going to pay even more for that house. So 8 to 10% is a very, very conservative estimate here. So my advice, the third column, buy now. If you qualify for the home loan, if the payment's within your budget, buy now. You can always rework or refinance your mortgage down the road when rates drop. But if you find the right home right now, a good strategy is not to wait because homes are projected to go up in value. Rates are projected to stay right around the same, stay in that 6 to 7% range like they were in 2024. So now you have this information, you can do something with it. If you're a real estate agent, I want to connect with you in 2025. I want to deliver an experience, a buyer experience like this for you. If you're not getting this from your current lender, reach out to me. I'd love to connect with you. Hey, if you're a seller or a buyer thinking about making a move in 2025, let's sit down, let's go over your situation, and let's put together a mortgage plan for you that fits your goals, both your short-term and your long-term, but then also builds a strategy for you to help you win the home you love, because there will be competition in 2025. I hope this information helped. It's my market forecast video I do every single year. I look forward to doing this. If you need anything from me, please reach out. Bye for now.